Hi there, welcome to the Real FX YouTube channel. This channel is dedicated in bringing to you the most valuable forex content that you're most likely to pay for somewhere else. And if you are new to this YouTube channel, don't forget to subscribe and hit the bell icon so that you can be notified when we post the next video. And without any waste of your time, let's get straight into the video, and I hope you find this video fruitful. Okay guys, on this video I'm going to be showing you how to do a top-down analysis using smart money concept, and the things you're gonna be needing to be able to do a top-down analysis. You need to understand the change of character, the break of structure, and also your pullbacks. So I'm gonna be starting with the Euro USD. So the first thing you need, for you have to go to the 4-hour time frame or the daily, but I prefer using the 4-hour time frame. So first thing, you have to be able to spot the trend. And how do you spot the trend? You're using highs and lows. So as you can see here, we're in a downtrend, and then we retracement, break of structure, and then after that we had a what? We had an impulse, and that impulse took out this high. So this high over here was taken. That simply means this here is our change of character. So that's our change of character on the 4-hour time frame. And then what happened is, now this is now our range. So this here, this over here is our range. This was our range. So now that being our range, we are still in this range, and if the market takes out this high, it shows that we are continuing with the trend. And if the market takes down this low, it shows that we are changing the trend from going up again to going downwards. So as you can see here, the market did a retracement and then started pushing up. So after the retracement, the market started pushing up. Now that was a sign, took out this high, that was a sign that we're continuing to be in an uptrend. So this became our high, and then this became our low. So this was now the new range from here to here. And if the market fails to take out this high and takes out this low, that simply means it's now changing the character. So this over here, we had a break of structure, there, and then this here was our low. So remember guys, for an uptrend you need higher highs and higher lows. So this low over here is higher than this low over there. So this also here is our break of structure. That over there is our break of structure. So what you do after that, okay, let's just focus on this range over here. Let's say the market was still here on this black candle here. So the market did a retracement back into the zone, and now we dive into the 15 minutes. We're trying to catch trades in this zone here, in this range. So we go to the 15 minutes time frame. We go into the 15 minutes time frame, and then we check what we have in that range. So what we have in that range, so this here was the high, and then we were breaking structure going to the downside, also break of structure over here, and then here we had a push back into the zone. And after having the push back into the zone, what did we have? So remember guys, here it's impulse, correction, and the impulse, the correction, then the impulse, then the correction, then also the impulse. So here we had a break of structure here. So we had a break of structure here, and then also now what happened, this was the last impulse, and then we had that impulse there, changing the character. This retracement here eventually took out this high. So that simply shows that our trend was now changing. Because if you check, this was reacting on a zone. Remember, this was the whole range. This was reacting on this candle over here. So this was reacting on this zone. But if you want to know more about the important zones, you can leave a comment in the comment section below, and I will make a video about the important zones. So we had that change of character here. We had a change of character, and we dived back into a zone. So that's what the market did. So we dived back into a zone, and then after diving back into a zone, then we started taking out the high. Remember, this was just the corrective trend, because the major trend is going up. So this was just the corrective trend, and after the corrective trend, what we do is we take the high of the major trend. So now we took the high of the major trend, we moved from here all the way going up. We moved from there all the way going up, and you can still catch some minor trades even on this uptrend going up, because now we reacted in the zone. We had that simple push, and then we went back, and then here we have a break of structure, reversal, break of structure. Here again we had that impulse which took out this high. So that is a break of structure. So you could have entered from here going up, and then after taking out that high again, we had this high taken out to show that we are continuing going upwards. And where was your entry? Was this zone here going up. So again, here's the high taken out. We are still in it. So this high was also taken out. We continue. Now this was the high. The market did what? A retracement into this candle, started pushing up, and then a retracement again into this candle, started pushing up. So here's the retracement. So here was the retracement, and then we started going where? We started going up. So this was before the news. I usually tell people that the fundamentals also respect the technical. So this was before the news, but our trade was already here. So we entered the trade probably around 4 hours before the news, but the news was still in our favor. So the news helped the market take out the high. So this was the high. Okay guys, that's it for this video.